Have you heard about volatility before? In today's video, we're diving into Bollinger Bands, one of the most popular tools traders use to track and measure price swings. Okay, here's what we'll cover today. First, let's break down what volatility really is. Volatility is one of the most important concepts in trading. At its core, volatility simply measures how much the price of an asset moves over a certain period of time. If prices are changing quickly and making large swings, we say the market is highly volatile, like this picture shows. This often involves uncertain conditions and therefore a risky market, which can, however, deliver high returns. On the other hand, if prices are moving slowly and staying within a narrow range, that means the market is less volatile, as we can see here. Low volatility usually means calmer conditions and a more secure market. Alright, now let's see how Bollinger Bands are calculated. The first step is to calculate the 20-period simple moving average using this formula. P is the close. In this chart, the blue line, here, represents the 20-period simple moving average. Next, we calculate volatility, which in statistics is measured using the standard deviation, as shown here. And finally, we build the upper and lower bands. To get the upper band, we add 2 times the volatility to the SMA. To get the lower band, we subtract 2 times the volatility. The result looks like this. Here is the upper band, and here is the lower band. Interpreting Bollinger Bands is quite simple. Narrow bands indicate low volatility, meaning price doesn't move much, as we can see here and here. This generally indicates sideways market, while wide bands indicate high volatility, and then a trend, as we can see here. You should also know that the bands contain about 90% of the price action. Okay, now we're going to study our first strategy, the reversal strategy. Here are the rules. The buy condition is when the price touches the lower band and a confirmation candle forms, such as a doji, a hammer, or a bullish engulfing pattern. In this example, we can see the price touching the lower band and a doji forming right here. So we open a long position at the breakout of its high. For the sell condition, it's the same thing but in the opposite direction. We see a shooting star forming after a touch of the upper band, so we open a short position. For the stop loss, you place it just beyond the band that was touched, like here and here. For take profit, if you are conservative, you can target the middle band, while if you are more aggressive, you can target the opposite band. In this case, the aggressive approach worked better, and in this other case, the conservative approach was more effective. Keep in mind, this strategy works best in ranging markets, not during strong trends. Now let's test the strategy on TradingView with Ethereum. First, we spot a resistance level. This candle pushes above the resistance and the upper band, but look at that big wick. Clear rejection. On top of that, we see a hanging man, here, and a doji. So we've got multiple signals pointing to a reversal. That's where we take a short trade, placing the stop just above the upper band, and we close the trade once price drops through the lower band. It happens right there. Now for the second setup. Here's a hammer breaking the lower band, which is a strong sign of a reversal. So we go long at the breakout of this candle, with the stop just under the previous support. Price moves sideways for a while, then breaks through the upper band, so we exit the trade at this point. And yes, it's another profitable trade. Let's now discuss our second strategy, called the Breakout Strategy. Big moves occur in trending markets when price breaks out of a band and continues in that direction. The issue with our first strategy is that profits can be limited, since we are trading in ranging markets. So how can we take advantage of these bigger moves? The rules are very simple. You buy when the closing price is above the upper band, and you short when the closing price is below the lower band. Of course, you set a stop loss with a maximum of 6%. For take profit, you close the trade when price crosses the exit moving average you have chosen. For example, here price closes above the upper band, so we open a long position. We then exit the trade once price crosses back below this blue moving average. You can adjust parameters with the market you are trading. Now, let's backtest the strategy automatically. To find the script that implements the breakout strategy, go to this link. Alright, so here's the page with the Bollinger Bands strategy. At the top we've got the chart, the strategy report, and the source code of the script. If you scroll down, you'll see all the details of the strategy. To use it on your own chart, just click Use on Chart. I tested it on Bitcoin with an 8-hour time frame. For settings, I used a 120 period length for Bollinger Bands, kept the default multiplier of 2, and here, the SMA length for my exit signals. Risk per trade is capped at 6%. Let's run the strategy up to today. To analyze performances, we click on Strategy Tester. It shows about 3,200% profit, a max drawdown of 22%, 69 trades in total, a win rate close to 45%, and a profit factor of 2.5, meaning the strategy is tradable. Here, we have our equity curve. When we click on performance to break it down, we see that long trades made money, but short trades lost. So it might be smarter to just stick to the long side. You can also see gross profit, commissions, and the buy and hold comparison. The strategy doesn't beat the market, but it gives useful signals. In the trade analysis, we've got total trades, winners versus losers, win rate, average P&L, and so on. About risk, we get here the Sharpe Sortino ratio, as well as profit factor. On the right, you can check the full trade list, and notice each loss is capped at 6%. If you want to try it out, I suggest backtesting it and tweaking the parameters to get the best stats. I mean, use parameters to maximize profit and minimize drawdown. That's it for today's video. Thanks for tuning in, and see you in the next one.